Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, August 7th, 2025. So, pretty crazy day today. I want to go over the morning notes because, again, what I do in these videos is just kind of a recap of what went on today and show you potential support and resistance for tomorrow. But in the morning notes, I can give you a clear understanding of what I'm looking because we already have the futures open. So I put that, we were gapping up another 30 points. The reason really didn't make a whole lot of sense because it was on the back of Trump and Russia and Putin talking, and I don't know what that has anything to do with our stock market or our economy or anything. We'll save a little bit of money so we don't have to give Ukraine money for the war. But in any case, it really didn't. It wasn't relevant for a 37-point gap up. But in any case, what I had said was that the ES was it got rejected at the 78% retracement, 64.27. If it breaks, then we could see an ABC target 64.50. I said the S&P is flashing another round of sell signals on the 60-minute chart, and I'm looking to fade early strength by selling call premium. This is the fourth straight gap up day, and history shows that once these gaps stop, they tend to get filled. So let's take a look at first the ES. So this is the top, 64.27. We came down. We didn't even test this again. So this was the 78% retracement. And now let's take a look at the S&P, and you can see on this gap up here, it went a little bit above it, and this is where I sold the call premium. We actually did pretty good in both the trade room as well as the fund because I sold the early the call premium. We were getting a lot of money because they were selling at expensive rates because we were up there. So there was just about a no-brainer on that one. So we made $3,095. And if we take a look, at the 15-minute chart, so we came down, we made it just past the 38% retracement. And then we got a little bounce at the end. But the thing I want to show you is just how eerily similar this is. So this is on last Thursday, very similar to, actually this was last Thursday. So we gapped up, came down, closed the gap, and went a little bit further. So here's our gap up. We closed it, went down further. And you could see we had this little bounce right towards the end of the day, and then we gapped down the next day. So are we going to get the same thing? I'm not sure. I wouldn't rule it out because it's very, very similar how they were gapping their way up here, and then every gap was getting filled. And we weren't really getting the gaps filled on this, but this one got filled quick. And we had sell signals on the 15-minute chart. So in the room, what I had told them to do was sell the spiders. Buy the IWM 522 calls, and then as my hedge, I was buying the spiders 636 puts. And obviously the 222 calls for the IWM expired worthless. But if we take a look at the spider, here you can see, here is the gap up. We actually took this trade pretty early on right there. Bounced up, but again, IWM went with it, so it wasn't really hurting us. Actually, IWM wasn't really following it that much. There was about a minute of stress. That was it, because then after that, things just started collapsing. So once we got at the gap, I closed half the position. When we got at the moving average, I actually closed the other half, so we made almost $3,000, a little bit more than that, on the SPY side. And anybody who didn't listen to me because I was conservative, they could have sold that for $7,000. So this was a fantastic setup on it. And in the trade room, it was spelled out exactly what we were looking for, and it played out. And whoever's in there paid for everything in really the last few days. But in any case, so if we're just doing an ABC move, and let's just say that this is where we're going to open down, this target would bring us at right here. You can see right near the 78% retracement level. So we have 662, 6250 is the 78% retracement, and look what it's doing. It will close this gap. So it's one of those things where if we start coming down here and these get taken out, that's where we could start looking at the bigger picture and saying, all right, if this is taken out, then we're probably looking at the next line in the sand, which will be the 50-day moving average at 6180. That's, so I'm saying 6200, 6180. That has to be taken out before I'm going to be convinced that we're not just making some type of wave 4 and we could still head higher. I'm always leaving that door open. I still believe that we saw the high last Thursday, at least short term, and I believe that it's not going to be as easy as everybody thinks right now on the long side. So if we take this out, then we're looking at 60.50. We have the support right here at 61.50. So again, you could use 6,200, 61.50. Below that, now we're looking at a 100-point drop down to the 60.54, and then we'd be looking at a move coming down to test the 200-day moving average, which is at 58.71. I'm not convinced that would even be. I think we'll definitely get a bounce, but I think the 50-day will be used as resistance. And if that gets taken out, again, I'm just talking in the future. I don't know if this is going to play out like this, but I'm looking more for a move to come somewhere between the 54.37, 51.65. The only reason why I'm saying that is that we have these matched two sets of bearish divergences, and the only thing we've gotten was these little tiny pullbacks and back up. So when these start building up, where the only thing is we're pretty oversold right now, so that gives leaves the door open that we could head higher. But these sell signals are telling me that at a bare minimum we should be looking at a 50% retracement. So that brings us at 56.27, and these are like the levels we'd keep an eye on. But until we see that 6,200 down to the 61.50 taken out, we don't even have to pay attention to the bigger targets, because that's what has to be taken out before we're going to start seeing real downside momentum pick up. And when it starts picking up, then we're going to see that carry trade unwind, and you're talking about a lot of money that is going to have to unwind fast, and that's what makes these moves exaggerated. So on the down, if we see some weakness tomorrow, or let's say we see strength, it obviously the bulls are going to have to get it above the 63.89 to really keep things going on the upside. And for the bears, obviously, they're going to have to take out these lows right here at the 62.88. If it's just an ADC move down, this is 62.62. Would be our downside target there. So we don't have any bullish divergences here. So to me, it's suggesting that whatever bounce comes, it's probably going to get faded, and we're going to look for more downside movement. Now, on the upside, hang on one second. Let me pause this. Okay, so on the upside, you can see from this high to this low, we've already made it to the 38% retracement. 50% retracement would make sense if they head higher, so that's 63.50 and possibly even up to the 63.60. Above that, there is this resistance at 63.73, but I wouldn't really bank on it, and I would think that we would be, probably heading up and going to probably test the highs. But right now, I think the bears, they have some momentum. We have to see what happens tomorrow. If it's going to be this repeat of last Friday, then we're going to gap down and we'll see a huge move. And what we did in the trade room, it's not really something I do that often, but I kind of like this because whenever we get any kind of big move, we typically get another big move that follows it. So this was last Thursday. We had this and a big move down, and then we gapped down. So once we got that, then we had a huge gap up the next day after that big move. So big moves typically follow big moves. So to me, I wanted to go in and have some exposure into tomorrow. It's not a huge trade, but we took the IWM, the 219 puts and the 220 calls. So right now, we're actually looking, if it gaps up, I think this is going to be going somewhere up into the 221, possibly even up to this the 222. That the trade would be profitable. And if we get that kind of gap, I would immediately sell the calls because we're probably going to come down and close this gap, or at least sell half of them, and then see if it does pull back, get out of the put side of it, and then look for your 0 days that we normally trade in the room. So tomorrow, I think we're going to have a big move one way or the other. If it's a gap down, it's probably going to come back and try to fill the gap. You immediately move into your normal 0 days to expire and take your normal positions. But if we get a big gap in either direction, we should be looking good. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in the morning.